Hey traders, how are you doing? Hope you're doing well. Today I'm bringing you a really amazing video. We're going to learn a lot. I'm going to show you one of the most simple and powerful strategies that I promise you it's going to help you become way more profitable than you are now. Even if you are already trading smart money concepts, this has nothing to do about it. It's even more simple than that. So let's go. All right, so let's get going. So before we start, guys, can you just like the video and write me a comment? What do you think about this video? Because it takes some effort to make these videos for you and share these strategies, okay, so that we can get the algorithm going and I can be more motivated to bring you more awesome stuff for you. Okay, guys, so let's go. So what is this about is the formation of this beautiful, my favorite candlestick pattern, which is the engulfing candlesticks. Okay, guys, so I'm gonna tell you, even if you trade this candlestick pattern, it has a really high win rate. Okay, the follow through percentage is above 88%. So what does that mean? It means that whenever you see an appropriate engulfing candlestick pattern, it means that after that, the follow through, which means that the next candles going into that direction is above 88%. And if you trade them in the right way, you can get like way above 90% win rate. Like that's really amazing. Okay. And this is an amazing confirmation because it's going to help you with your trading, whatever strategy you are already trading. If it's moving averages, if it's support and resistance, more smart money concepts, whatever it is, like if you apply this, like trust me, you are gonna avoid a lot of losses. Okay, so first, let me tell you what do we want to see in the charts to be an appropriate engulfing candlestick. Okay, so first off, I would say it's the size, right? It's a very noticeable size, large candle with the body, okay? The body for me, it's the most important thing. It has to engulf or hug at least the previous candle, okay? So if for a bullish candlestick, preferably like I would love to see like a base formation or a little range and then a breakout, okay? Or you can be trending, then like a little pause, right? This is going to be acting kind of like an order block or demand zone, whatever you want to call it, okay? And this one, the next candle, that is your green light, okay? So imagine if this is traffic, right? You're in the car and you see one of these, and that's your green. That's your entry candle. You're going to be taking the entry at the close. You don't have to wait for the break of the high. You can, but already the candlestick itself, it's a really good confirmation. Okay, so the entry has to be at the close, okay, and your stop loss is going to be below. So imagine that's going to be amazing risk reward ratios with low risk and really high probabilities of success. Okay, so also another thing is location. You want to make sure that you are trading these candlesticks at the most important locations, okay? Because you're gonna see in your charts a lot of engulfing candles when you are in ranges or when you are not in the appropriate session time, okay? So make sure you're gonna put yourself in the best position to win, right? You wanna be at the best. you're going to be trading at the high volume sessions, okay? And you're going to be trading at the best locations, just like real estate, okay? So same thing for the bearish engulfing candle. Before that, you're going to have a small bullish candle, and the next one is going to be a very noticeable candlestick, okay? So it's basically, it's like as if somebody is telling you to do something, like a little angel or someone is telling you, okay, now it's safe to go, you can enter, okay? So your entry is going to be at the close, your stop is going to be above, okay? So let's go to the next. Okay, so we're gonna identify, right? So this is extremely noticeable, right? So it's very, very simple. We are in a range, as you can see, price is going nowhere. Right next to it, we have beautiful, bullish, engulfing candle, okay? As you can see, the body is very, very large and we barely has a wick, okay? If it doesn't have an upper wick, also, I mean, it's okay to avoid them because usually that means that there is no range to continue going, but there's a 50-50 chance, okay, in those cases. But most of the times, when you see a pretty awesome engulfing candle, power candle, okay, it has to be powerful, it has to be noticeable, and it's gonna stand out from the rest. As you can see, this candle is larger than the rest, okay? Also, you want to avoid entering on like huge candles because that means the push or the move already passed. Now, you can trade this in basically in any asset class, indices, on gold, on whatever you want, okay? Whatever you trade, whatever you feel comfortable. And this also happens in basically any time frame, okay? So remember, the markets are fractals. It can be a 1 minute chart, 5 minute chart, 10, 15, 1 hour, 4 hour daily, okay? So whatever is your trading style, that's completely fine. So let's go. Okay, so we have this base price completely broken above, okay? So you take your trade right here, your entry, and your stop loss right here. So what I love about this is that your risk reward is going to be awesome. Why? Because you're just risking the length of the candle. That's it. Okay. So if you see price starting to retrace, right, or go into the opposite direction, which is very difficult, right? Because as I told you, it has a really high follow through rate. Okay. So if you, in case it happens, like you can just close your trade and you're gonna be pretty good. Don't risk more than 1%, okay, in any trade. That's the most advisable thing to do. Okay, don't over leverage, don't abuse, right? Don't, like, this system is very powerful, but that doesn't mean you're gonna full margin. Okay, so let's go. Boom, there you go. As you can see, we had a pretty awesome push to the upside. Now let's see if we have a second opportunity. Okay, as you can see, guys, it made a little support right here. It also matches with this fair value gap, and it's also around the 50% of this first push. Okay, so now it means that we are in an uptrend. Okay, so you can take your entry above this high and your stop below this low. Now let's see. Boom, there you go. Okay, pretty clean, pretty obvious. This one wasn't as obvious as this one, but since we were already in a trend and you already had this beautiful trade, you could have taken or pyramid your position, okay? And it was okay and it was safe. And as you can see, from the initial position entry up to here, it's an amazing risk reward, okay? Now let's go to the next slide. Okay, so we have now a bearish engulfing power candle. Okay, so it's extremely obvious, isn't it? We have a range, we have a closure below this range or base, and it's engulfing the previous candle, right? It's obviously it's engulfing basically the previous 10, 15, 20 candle, right? But at least you want to see engulfing this, the previous one, right? So you're safe to enter right here and your stop above this high. So let's go and see what happens next. Beautiful. Now, these examples are in NASDAQ, okay, and they happen this week, okay, so they happen all the time, okay. You just got to be patient, and as I told you guys, location is very important, right? And the size, and make sure you are trading in a high volume session, just such as the NYSE, right? So as you can see, beautiful push to the downside, right? You were safe, your stop loss was pretty well protected, okay? Now let's see if we can get a second opportunity. Okay, we have a retracement to this level, right? Which is also around the 50% of this push down, and it's basically like a break retest, okay guys? So these very simple strategies, no complications, no smart money concepts, okay? Like I'm not saying it's wrong or anything. I'm just teaching you this very simple strategy that it's gonna give you a better result than you are having now. Why? Because you're having higher probabilities and more confirmation. Okay, trust me. Like these candlesticks, they're not gonna fail to you. Okay, if you trade them right and you do exactly as I'm telling you, looking for the right location, the sessions, then you're gonna be safe. Okay, as you can see, this one is engulfing the previous three candles, right? So we have 1, 2, 3. That's called a three line strike, okay? And location is at this previous support. Now it's acting as a resistance, okay? So entry right here, stop above. So let's see what happens. Amazing trade, right? Imagine your initial trade, which was right here, and look where price went. So it's pretty awesome, right? Like the good thing about this is like they happen like all the time, and you can have your profits in and out in the same session. By the way, guys, like I have a private group, I have a course, strategy, mentorship, everything you want to have like a further uh, learning skills, you can just contact me in Instagram, okay, and we can talk about it. So now let's go what not to do, okay? So this is very important too, because I already show you what you want to see, how to identify them, but not all of them are going to be uh, good or appropriate. Okay, guys. So try to avoid entering ranges. I mean, that's pretty obvious, right? Like we want to avoid being stuck inside a range, especially if this range measures like, let's say 10 pips or whatever. Like that's not enough space. Okay, like what you want to do is like having a clean breakout, okay, and wait for price to be trending. Also, make sure to have enough space, as I told you, okay? And watch out for the levels, okay? Because you don't want to enter here and price getting stopped out at the support right below, or same thing to the upside. I mean, some of them did work, but I rather avoid these ranges, okay, guys? Another thing super important is you gotta make sure to identify this consolidation. Like I hate these nasty ranges, like these nasty consolidations in which you see overlapping candles like sideways. Like you really want to avoid that because you have like a candlestick and then like another one like printing right next to it. Like you completely want to avoid that. You want to see and you want to have like a big, strong, obvious, strong power candle, okay? Which is like, imagine it's like Moses, like showing them the way, right? Or some kind of like a strong, muscular candlestick, like leading the rest of the little ones, okay? So that's what you want to see and avoid this. That's pretty obvious, right? That's not a good trading condition. And well, like what are the advantages? Like what, as I told you guys, like it has a pretty high risk reward winning ratio. They are ideal if you like to have quick profits in and out in the same day. Or also you can apply them if you are a swing trader, obviously. You can trade them from the 4 hour, daily, etc. Okay. And it's gonna be exactly the same thing. Also, it does work on anything you trade, any pair, indices, metals, whatever. Okay. And as you see, like they're pretty obvious to identify, right? Like you don't have to be um, thinking or like calculating anything, right? Like it's just like a pretty something obvious you have in your chart. You want to execute, be bold, don't hesitate, but also you have to back this. Okay, guys, like I want you to train your eyes and just let me know in the comments how did you do if you trade this way, if you like this video, and tell me what would you like to see on the next video. Okay, guys, so you're invited. We have a private telegram group. Okay, there is a mentorship and the full course. Okay, so you can contact me. Here's my Instagram, and I hope you like this video, guys. That's all for today, and see you in the next one. Okay, good luck.